All right, welcome everyone to another episode of Happy Hour with HatchMan. So I am here today with Sarry Ibrahim. Hopefully, I'm pronouncing that okay
Mhm.
so far. But Sarry is a financial specialist out of Chicago. He is a member of the Bank on Yourself organization. He helps business owners, real estate investors, and full-time employees really just grow safe and predictable wealth. So I'm super excited to be able to, pick his brain a little bit today. So, Sarry, welcome to the show. Welcome to Happy Hour.
Hey, Braden, thank you so much for having me on. I appreciate it.
Of course. Appreciate you. It's probably a little bit closer to actual happy hour time there in Chicago than it is here in Arizona right now.
Yeah, it's about 3:30 right now here.
Not too bad. So I'm sticking with water for now. So not the actual whiskey today, but that's okay. We'll still have some fun.
Good.
So Sarry, go ahead and tell us a little bit about kind of how you got started into what you're doing and your main goals and focuses for the people you work with.
Yeah, absolutely. Thank you for that. Thanks for having me on. So as you mentioned, I'm from Chicago, Illinois, born and raised here. I live here, and I used to live in the city, and we moved to the suburbs recently, my wife and I. And she's a nurse. I run a company called Financial Asset Protection. We do financial services for small business owners and individuals in all 50 states, primarily over Zoom and over the phone, as most people do after COVID, I guess. Um,
Right.
but but yeah, we work with all clients of all sizes. Really, we particularly specialize in small business owners and help them become their own sources of financing, plan for retirement, getting out of debt. A lot of transitioning from full-time employment to entrepreneurship. So we help do the business coaching and the financial coaching to get there. So yeah,
Yeah.
that's who we are. We've been in business for about 6 years now, and it's been a blast. I love working with clients and all types of backgrounds, and even our extended professionals like loan officers, accountants, lawyers. So yeah, it's a really specific niche, and definitely enjoy what I'm doing.
That's so cool. And yeah, like you said, it's a very specific thing. So how did you get into this? How did you decide that this was something that you wanted to do full time? Do you have a background in it, or tell us a little bit about how you got started?
Yeah, definitely. So it was partially a partial background. So it kind of started when I was a senior in high school. We had to
Okay.
take everybody at my high school during that time had to take one class. It was called consumer economics, and it
Yeah.
was how to write a check, what is a mortgage, what is a credit card, what is interest, very, very basic financial literacy. And I think we need more of that, right, in schools. But it was my favorite course that I took because it was probably the most applicable course, in high school to real life, and I really liked it. I kind of understood the subject matter. I got into like credit cards at a very young age. Like as soon as I turned 18, I applied for a credit card to boost my credit score and try to get like active, like to be like financially proficient at a young age. Just something I've been really passionate about. And as I was going through college and stuff, I didn't really know what I wanted to do. I kind of had an idea of like just general business or general finance. And as you know, being in financial services yourself, there is no really like one job called finance, or it's thousands of jobs in different areas and different categories that involve finance and management and business. So I was lucky, I went to get my MBA. I got an MBA in project management. I thought I was going to become a project manager, but started working with Allstate Insurance. That was my first like real job. And I was working in sales and marketing, just talking to people. I started off kind of as an insurance salesperson, and I don't like those terms, but I really enjoyed talking to people, and I started noticing that people became really comfortable talking to me about money and talking to me about budgeting and things. And I was like, this is probably something I should pursue right here, like like working with
Yeah.
people, talking to people, solving problems. And then that's what I decided to do. I decided to branch off, start my own financial services from there. We do all types of financial services, from the coaching side to the insurance side to the retirement side, advising, kind of all wrapped together, and then backed by the bank on yourself concept. That's our main focus.
That's really cool. You touched on a lot of things there. So first off, was this a public school that offered a class like this, or was this some sort of a private school?
Yeah, it was a public school.
It was a public school. No way. Yeah, we
Yeah.
definitely need more of that. I mean, first of all, I'm a huge advocate for education in
Mhm.
general, and I do. I hear that all the time. We joke about it. I think there's memes about it as far as like, oh yeah, let me balance my checkbook here that they taught me about in high school in trigonometry. Like normal people didn't have those classes, so good for you for having those and finding that passion early. Because I do think that is a big misstep just in the overall education of the US education system in
Mhm.
general, because a lot of people don't do that. So that's so cool that you found your passion there, and then like you said, you kind of branched into what it is now and really just helping people. I'm like you. I don't like to say the word sales. I don't
Yeah.
feel like I'm a salesman. I'm finding solutions for people, because I'll tell people no. Like if some people come to me and there's not a good solution for them, I'm not going to help them because it's not the right thing to do. So that was really cool. That was good information as far as how you got to where you are. What I want to talk a little bit more is this bank on yourself concept. So
Mhm.
that's something I'm personally not familiar with it. So can you talk to a little bit more about what that is?
Yeah, definitely. So kind of the background of bank on yourself really started off with the concept of becoming your own banker. And
Okay.
that concept started off with somebody named Nelson Nash. He wrote a book called Becoming Your Own Banker. The book came out, I think, about 30 years ago, and it talks about his history, Nelson Nash's history, the author. He was this was back in the 80s when interest rates were like really high, when interest rates were above 10%. And
Yeah.
he had a lot of like debt outstanding, and he was paying about like $50,000 a year towards interest to different lenders. And he wanted to figure out a way to like reverse the table, like recoup that interest back into his pocket. So he discovered like the strategy of using cash value whole life insurance for you to become your own banker, for you to finance things in house. You decide the terms and conditions, and then you reap the interest back into your pocket. And it led to the infinite banking concept. And then that also led to the bank on yourself concept. So, bank on yourself and infinite banking essentially both involve the use of dividend paying whole life insurance as the underlying asset, but it's just different trademark. So I joined the Bank on Yourself organization. It's a trademark owned by Pamela Yellen. Joined the
Okay.
organization about 3 years ago, went through the training, and we specialize now in helping clients structure dividend paying whole life insurance policies. And I get it. Whole life insurance is not the sexiest term, but it's not necessarily about the title of it. It's what it could do. So what could it do? That is, it could grow tax free wealth. It could create. You could borrow against the policy and still have your money growing in other places, so you can use it for other investments. It's not affected by market conditions or market volatility, and the loans that you get out of the policy are not subject to underwriting, nor are they subject to economic conditions. So this means that you could essentially create your own banking system, not
Yeah.
literally an FDIC insured bank, but rather the concept of you owning your own banking system that you control, that you can leverage for other investments, for real estate, for other things. So that's like a
Yeah.
high overview of what bank on yourself is.
For sure. No, that's really cool. So basically the idea of it, because with banks, they have deposits and they have their vehicles that they do that. But then a bank, their main goal is to lend money. That's where
Mhm,
they make their money is by letting people borrow it. They have it. They're that glorified middleman, really.
mhm.
And so your concept or this infinite banking or bank on yourself concept is the idea that we can do that ourselves, like you said, through the vessel in this scenario is the life insurance that you fund it yourself and then you use that to borrow against and essentially help yourself earn long-term wealth by becoming your own banker.
Exactly, spot on.
Okay. That's excellent. That's super cool. So again, that's a pretty unique concept. I don't think a lot of people know about that. So again,
Mhm.
if there's anyone that's interested in this, we're going to put Sarah's information up everywhere so you can contact him to talk more into it.
Okay.
But that's really cool. So switching gears a little bit here because obviously I'm in mortgage and
Yeah.
the real estate market and we lend money. That's part of what we do.
Yeah.
So does it work for things like that? So like let's say somebody wanted to purchase a home, is there an option to do that, or is it something else to explore if you can't get qualified for say a traditional mortgage?
Yes, absolutely spot on. So there's a lot of scenarios, right? So one
Okay.
scenario could be if you have enough cash value in the policy, you could leverage the whole policy that you have for an entire house. So for example, a house costs $300,000. If you have enough cash value in there, you could be your own mortgage where you're going to the policy, borrowing $300,000 out of it, buying a house cash, and then you finance it back. You pay, for example, $500 a month or $1,000 a month back into the policy over the next 20 or 30 years. You're your own lender, so you can decide those terms of how
Got it.
much you pay
Okay.
yourself back. That's one scenario. Another scenario is a lot of people don't have $300,000 in a life insurance policy, so they might have, for example, $20,000 or $30,000. Now they could use their policy as collateral as the down part of the down payment. So they would
Okay.
use that for the down payment alongside bank financing. And then some people might do both. They have, some properties owned by lended by banks and some by their policies. And really the point is that you can decide where you're going and what to do within your own
Yeah.
banking system. It's not necessarily like let's cut out banks completely, because
Right.
I don't think we could do that, just completely cut out banks. Rather, let's try to recoup some of this interest back into our pockets and kind of have our own banking system.
Gotcha. So it's a way to kind of really get around the really high interest items that when you do borrow money. Yeah. So and because again, yeah, like credit cards and
Mhm.
debit cards, those things obviously still got to have a standard bank for that. You're not going to be able to, get a debit card attached to your host, your life insurance policy, nothing like that. But no,
Yeah.
that's a good way to think about it. So when you fund these, is this something you apply for in order to get? Do you have to fund it up front? Is there a cost to it? I know we don't need to get into all the major details, but just real high level.
Yeah, definitely. So what we do is when we meet with clients, we have a financial analysis. It's typically like an hour long. It's the most important part of the relationship with the client, right? It's getting to understand their financial situation, what's happening right now, what do they want to happen differently in their lives in the next 5 years, 10 years, 20 years. And then from there, from the information we gather from their financial analysis meeting, we would then prepare a policy, either one policy or two, or if they're married or they have kids. There's so many different scenarios that go,
Yeah.
but typically we would use information from the analysis as a map as to where to go. We would share typically over Zoom, we would do like a screen share meeting with the client, showing them like, if you allocated this much money to the policy, this is the kind of growth you could see. This is what you could do. This is how it'll amplify your real estate venture or your business venture or whatever you're working on. This is how it could help it and improve it. So yeah, it could be one policy like for $300 a month that you would put into. That was my first policy actually. I just put $300 a month into a life insurance
Okay.
policy, and every month as I was putting money into it, a portion was going directly to the cash value, and the other portion was going to the life insurance. Or it could be a lump sum, or it could
Okay.
be a lump sum and monthly payments. So really, there's so many different ways to structure it. But in theory, it's a life insurance policy that you're paying for, and a part
Right.
of it is cash value, and a part of it is life insurance.
Very cool. So yeah, it's just another investment that you're funding into every month, but it has a
Hmm.
lot more options to also borrow against, which again, I
Hmm.
mean, how many investments can you say do that? So
Yeah.
that's really cool. And into that, I know, we've talked about you are also a real estate investor and you help become investors.
Hmm.
So how do you do that? Is it mostly through this program, or do you have other scenarios in where you can help real estate investors, especially ones looking to be? I deal with a lot of first time
Yeah.
people, like, if they don't, a lot of people don't know where to get started when it comes to real estate investing. They hear things like 20% down and,
Yeah.
6.5% interest rate, and they get a little scared.
Mhm.
So what are some of the things that you are doing to help people become real estate investors?
Yeah, absolutely. I would first differentiate right between like passive investing and active. So like
Okay.
passive is like for example, you're just investing into a deal. You have no say in the deal, what happens, and that's kind of good, right? Because you don't have to worry about anything. There's no decision making involved. You're just moving money into a fund or a deal and then
Right. And
getting a
then
return back. And then
letting us
there's
do its thing.
Yep. And then there's active. Active is where, like you said, you're finding a property, 3% down, 6% down. You're in charge of renovating it, finding the tenants, or flipping it. I've focused a lot of my integration with Bank yourself on the passive side. I still work with a lot of active real estate investors, but we focus more on the passive side. So we help clients find investments like real estate opportunities where they're only like very small amounts, 12,000 to 25,000 and up, of course, to like over
Yeah.
$100,000 towards real estate. But really, I think that our niche we're going for is 25,000 because so many people I think nowadays have that kind of money but don't know what to invest in. They don't, the stock market, obviously, if you viewed it in the last couple of weeks, it hasn't been that good.
It's been a
Uh,
rough ride.
yeah, yeah. So I really like passive real estate investing. Again, I'm not pushing. I'm not saying go do passive real estate investing.
Well, of
Talk
course.
to yeah, yeah. But I think that it's a really good way to grow your wealth through real estate without doing much work. But here's a twist though. So a lot of people get into passive real estate investing after they've done a lot of active real estate investing. They know
Yeah.
they understand the industry, they understand the niche. But at the same time, I kind of didn't take that route. I never did active real estate investing. I just went directly into passive investing just because a lot of my clients are general partners of real estate deals and syndications. I see, and on our podcast, Thinking Like a Bank, about half the guests on there run real estate funds. So I've kind of just been around it for like years now, just hearing these terms, LP, GP, the fund, the syndication, all these terms that I understand it now because of those reasons,
Yeah.
and so I decided to just go directly into passive real estate investing using my bank on yourself policy.
That's so cool. Well, because again, there's, like you said, when it comes to finance, there's not one single thing. There's lots of options for people,
Yep.
and so this is your niche, and it's what makes you happy. I can see it behind your eyes, getting excited about it, because and I think that is something that a lot of people look for, because I know I've had those conversations in the past, especially if someone's purchased real estate and they recently sold it, they're sitting on some money, they're not entirely sure what to do. We hear all these fears right now of, the looming recession. We see, that, like you said, the stock market is all over the
Mhm,
place, and they're just not sure what to do, and they're afraid because that's hard-earned money. So I think a lot of people just out of fear put that in their bank and just
mhm,
let it do its thing. But I think they're missing a lot. Like as an investor myself and
mhm,
dealing in those things, I personally think letting that money sit there in the bank is not the best use of those funds. So what's your what
mhm,
do you think about that? Do you infer to just keep that cash, let it do its thing in a times like now, or where do we invest it? And especially from a passive spot, like
mhm.
a lot of us are looking for something where we can just fund it, let it grow, and see a halfway decent return, and that's a win. So talk to me a little bit about that.
Yeah, definitely, Braden. So you mentioned a good thing. Why not just, out of fear, keep my money in the
Yeah,
bank? Well, the Federal Reserve just announced that interest rates, not interest rates, sorry, the inflation rate right now is 9.1%, as we're in
9.1.
mid-July 2022. So that means that if you have $100,000 in your bank account by next year, this time approximately, it's technically worth like 91,000. You lost about 9% of
You're
that
gonna
value
lose money with
because
inflation.
Mhm. Because if your money's sitting in the bank, everything else outside of the bank is increasing in cost. So you're losing buying power. So that's a big problem. It's almost like a silent tax that you pay on your money by having it sit somewhere not growing. So then so the second question is, do we take all our money and just invest all of it? And I wouldn't necessarily agree with that. I wouldn't say we invest all of it, right? We need some reserves. So what if there's a way where we can kind of balance it? We can have our reserves compounding, growing, and we could leverage our reserves for other investments that'll exceed inflation. And the good thing about real estate is and other investments is when inflation happens, they actually go up in value. As we saw with real estate, and I'm sure you've
Right.
seen this doing loans, right? Like between 2020 and now, home values have increased exponentially over
Big
the last
time,
couple of
especially the
years.
last couple of years. Yeah, last couple of years have
Yeah.
been unique. But again, anyone who's been a homeowner that purchased, they're really happy that they did because they were absurd returns over the last couple of years.
Yeah.
That's not normal. But
Yeah.
again, even in a recession, and I have had this conversation with so many people.
Yeah.
I've got a ton of videos about it because um, I'm not sure what your age is. I'm not going to make you, tell you the world how old you are unless you want to. But for me, like when I hear the word recession, and I
Yeah.
think people in my generation, when they hear the word recession, they think of 2008. And
Yes.
2008, that was a major recession due to a housing bubble and a housing crash. Whereas today, and if you look at all throughout history, all the other recessions, that was the one-off. The housing crash was the one-off during the recession.
Mhm.
Housing typically does very well
Mhm.
during recessions. So that's something I love to educate people on because it's a lot of people are scared that, oh, I'm not going to buy a house right now because the home value is going to go down over the next
Mhm.
couple of years because we're entering a recession. But that is false. And I
Yes.
think it's important for people to know that concept and and that it is still a smart investment. But like you said, that may not be the one and only thing for that individual. There's other investment
Mhm.
opportunities when it comes to letting your money grow for you, even in recessionary timeframes.
Yeah, absolutely. And I agree with you definitely. Like it's not going to be if when we say recession, it doesn't mean another 2008 is going to happen because in
Right.
2008, like the foundation of what the problem was in 2008 had a lot to do with how improper, right, the mortgage industry was prior to 2008, like income state, like stated income and all these different things and all these banks and everything was kind of really fragile before
Yep.
2008. And then after that, there have been, the Dodd-Frank Act and a lot of other acts that really tightened up the mortgage industry. So I think for those regulatory reasons, we're not going to see another 2008 as far as a real estate crash. We'll have a recession, but not necessarily a real estate crash.
Agreed. No, 100%. And again, I do think it is just a lot of one misinformation in the media.
Yeah.
They love to, they love that fear.
Yeah.
That's what they're true salesmen, the media. They like to sell that fear so that we
Yeah.
can get in on it. So I like to set the record straight because there is still opportunity. And
Yes.
in my opinion, especially in recessionary time frames, I think that is when there's the most opportunity because that's when most people get afraid to do
Yes.
things. So I've had that conversation with other people on my podcast, but like fear and risk are those are things you have to overcome if especially as an investor, and understand that it's okay to lose sometimes.
Mhm.
So I know you yeah, have that a similar belief when it comes to failure. So
Mhm.
what are your thoughts on failure and things like that in investing, in life, whatever?
Yeah, yeah, back to school, right? So, like, not only do we not learn about financial literacy and financial things in school, but also we're taught that like failure is really bad, right? Like if you get an F in a class, it's on your report card and it's like a permanent thing. And then we take that mentality with us into the real world. And it's like, I want to start a business, but what if I fail? Then I have an F on my report card for the rest of my life. We not literally think that way, but subconsciously we're thinking that way as adults now because of what we think about fear. In reality, I think it's the complete opposite. I think we have to get those F's right in order to succeed, especially in entrepreneurship. There's no such thing as somebody like reading one book on entrepreneurship or a guide and then following that guide and then becoming a successful entrepreneur. There are many books out there. There are many coaches, mentors, things like that. But still, there has to be like the failure to start, right? Because you don't
Right.
know what you don't know. And then plus the failure makes you stronger. It gives you an idea of how to progress, how to advance from that. And things take multiple times to succeed. Again, school teaches us if something doesn't work the first time, you're not good at it, right? If you took
Right.
algebra freshman year of high school and you got an F in it, they would say, teachers and counselors would say, stay away from engineering or accounting.
Right.
And the reality is that you can't even compare those. They're not even on the same subject, right? Like you have 20 years ahead of you to progress and succeed and learn.
No, I agree. I've read so many books on this, especially when it comes to education and
Yeah.
how things are taught in school. It's really anti-entrepreneurial and small business ownership. Like
Yeah.
they're teaching you to go work for somebody and yeah, do a good job. If you don't, then you need to find something else that you're better at. But
Yes.
like you said, that's not the case. I've read so many books about CEOs, startup people, and talking about I just read one recently, a super young guy. He started his own business, was super successful, literally made, I think, millions of dollars, like
Mhm.
stupid money. And then had a new idea to start another business and went all in, spent every piece of capital he had
Yeah.
on this new business and it failed, ended
Mhm.
up going bankrupt. So you go from millionaire to bankrupt, and then
Yeah.
he starts another company and same thing, then it becomes successful. But had he stopped at that second venture when he went bankrupt and didn't try anything else again, then he wouldn't be where he's at today, which is making even more than where, with the first business. So, like you said, failure is a part of learning, and
Yes.
it's an important step because, like you said, if you don't at least try and realize that, look, it's okay if I screw this up and I mess up. What's the worst that can happen? I go broke, I lose my stuff. It's just
Yeah.
stuff. You can bounce back, you can figure things out, but I do think that you have to go through those patterns in life where we fail and then we pick it back up, and that's how we learn. And honestly, because once you fail at something hard, that's going to stick with you forever, and you're going to make sure you do not do that again.
Exactly. Plus, you hear so many stories of like these tech millionaires and billionaires and all types of entrepreneurs where they started a project, they pitched it to investors or whatever they did, and then they failed throughout that process. And then they happened to one day, be in that city and they met somebody, and then they just started this, So in other words, the failure was the foundation, it was a prerequisite to their success. Had they not taken those chances, they would have never found that person, found that investor, found that idea, collaborated. So like I think that if you
Big
if you did
time.
something and it doesn't work out, something else is going to come that way to do the process.
Yeah. Well, and I think that is one, it's mindset, right?
Hmm.
You have to be in that right headspace to realize it's okay. It's okay if you fail.
Yeah.
Because again, if I remember having this conversation with like a newer loan officer, and they were scared about making
Yeah.
a phone call, or what if I get rejected or say no? Well, then you're in the exact same situation you're in right now, not even picking up the phone. So it's
Yeah.
like you're not going to change if you just do nothing.
Yes.
And so I think that's a lot of really just good information. You have to be able to grow through that failure and really understand that. But on a second piece of that,
Mhm.
I mindset is a big part of it, but I don't think anyone personally can do it alone.
Yeah.
I think the people that we surround ourselves with become part of our circle and help us grow. And that's why I like doing these podcasts. I get to learn
Yeah.
something new, like this infinite banking in this
Hmm.
bank on yourself concept. That there's probably a lot of my followers that don't even know what that is. So it's for a chance us to educate them by networking and meeting new people. So, um, did you arrive? I mean, who are some of your influencer and some of the people that you've connected with in order to get to what you're doing today?
Yeah, absolutely. You're definitely right. You need people around you. You need mentors, coaches. That's something I've been heavily involved in. I've worked with about 5 or 6 coaches and mentors over my
Yeah.
entrepreneurial state journey. So yeah, I've hired coaches that I've paid for out of pocket. I've worked with coaches at my first job that was funded through my company, and then I have a mentor right now that I work with. We still work together. Who's motivated me to start my own podcast? Who's motivated me to take kind of bank on yourself to the next level? He's actually a bank on yourself professional. So yeah, I
Nice.
definitely recommend that if you are an entrepreneur right now or wanting to be an entrepreneur, have definitely a mentor or a coach, somebody that you can work with. I think that if you were thinking about who to work with, like how do you find a mentor, how do you find a coach, find
Yeah.
somebody who's like way ahead of you in your industry, right? Like if you're a new loan officer, find somebody who's done like 5,000 loans over the lifetime, somebody who's like way advanced, way ahead of you, and then learn from them. Would you agree with that? Like, find somebody who's like way ahead of you in what you're doing, so that way you can actually learn. And it's very similar to, like, think about being an athlete, right? Think about
Hmm.
UFC. If you had an MMA fight coming up, would you train with somebody who's an amateur, or you would train with professionals, right? You would train with people who are way more skilled than you, because your opponent is probably doing the same thing, training people that are way more
Yeah.
advanced than them, and kind of just increase the stakes, raise the stakes as far as practice goes.
100%. Yeah, you look at any high level professional, whether they're an athlete or CEOs. Every single one of them have a coach or
Mhm,
somebody that
mhm.
helps them, because again, there are a lot of people that are naturally talented, no
Yeah.
matter what it is, whether it's your industry, whether it's sports. There's a natural talent, but I
Mhm,
think that can only take you so far on your own. If you hire that mentor, again, somebody that's done it, I think that's a great way to get started, because you don't have to overcomplicate it. If you're,
mhm.
yeah, me doing loans,
Yeah.
if I want to get to $100 million a year in volume, I
Yeah.
need to talk to somebody that's done that or is
Yes.
doing it, because then we can collaborate and learn, and that's how you get to the next step. Because again, the information's out there. That's the best part about really anything in life. We, especially now with technology, like,
Mhm.
again, you're sitting in Chicago, I'm sitting here in Arizona, and we're having a conversation about this. And you can do that with anyone. I mean, we can have these conversations with anyone throughout the
Mhm.
world, really, with technology, and really just educate ourselves and help get ourselves to the next level. So I think it's a really exciting time. And I think there is opportunity just all around us, if you're just willing to look and just willing to open up and have those conversations.
Mhm. I definitely agree.
Well, that's so cool, man. Well, Sari, let's talk. I want to talk a little bit about your podcast, because
Yeah.
I know you have one as well. So what's the name of your podcast, first of all?
Yeah, so it's called Thinking Like a Bank, and as you could
Thinking Like a
tell,
Bank.
the title of it is, pretty much gives it away. It's how to think like a bank, right? How are we thinking of preserving capital, saving on taxes, getting into real estate, scaling our portfolios, mitigating risk? So I bring on a lot of guests who are real estate investors who run syndications. I bring on a lot of accountants to talk about tax saving strategies, different types of investors, private money lenders, and how to get into private money lending and how to leverage private money lenders. So really, we're kind of just trying to take the banking function down to the community level, where it's down to, you and me could do banking together,
Love it.
rather than having to go through, Fortune 500 company that pretty much, controls all the terms and conditions. And I think that really, like, we need to bring it down to the small business individual level.
No, I agree, especially when it comes to small business owners, because part of when you're a business owner is, when it comes to tax time. I
Mhm.
have this conversation a lot because I get to see the tax returns, and I get it. As a business owner, you don't want to show a lot of income on paper.
Yes.
You have a lot of write offs, but when it comes to needing a loan from a lender, especially a traditional loan, that can be difficult, because
Yes.
on paper it's showing, yeah, we grossed $1 million, but we made, $30,000 after
Yeah.
deductions and stuff. And they get really discouraged, thinking that, well, I applied for a mortgage, I got declined because I don't make enough money. I guess I'll just, I can't do anything.
Mhm.
But by really expanding people about what's available to them, especially like you said, like people like me and you, we can become our own bank. We have other options. You had mentioned hard money.
Mhm.
That there are a lot of things you can do without having to, qualify
Yeah.
and get financing to become an investor, to help create growth and assets for yourself. So I love that. I think that's so cool. So, um, I mean, we're right about 30 minutes here. I think we've had a great
Mhm.
little intro. So I definitely anyone that wants to check out Sarry's podcast, it's available. So yeah, I'm gonna put all his contact info up here. But any parting words for us, Sarry, before we cut this thing off?
Yeah, Brandon, thank you so much for having me on. I really appreciate it. I enjoyed our conversation as well. Yeah, and if the audience, if you want to download a free copy of our book, it's called Thinking Like a Bank. You can find it at thinkinglikeabank.com. You can also check out the podcast there, learn more about us, and we also have like free consultations. And there's a lot of free content out there you could download before reaching out to us. So it's
That's
Thinking
the
Like a
best
Bank.
part. Yeah.
Yeah.
You're giving out so much of this info free, but again, if you guys want to take a deeper look and
Mhm.
really, figure out your financial situation, give Sarry a call. I'm sure he'll, set up a Zoom like this and
Yeah,
and get you all taken care of. So, Sarry,
definitely.
again, I thank you for your time today,
Thank you.
and cheers. I know we're not drinking right now, but cheers to you and for your time. I appreciate it.
Thank you.
Thank you.